Hi guys, you are watching Second Source. In today's video, we are going to talk about 10 things you should know before starting to invest. But before we do that, if you have not already, subscribe for more content like this. Investing has become a need in today's society, not only an option. More people are investing than any prior generation. Online trading applications have become financial markets that provide access to the majority of investing alternatives these days. And on the other hand, it also comes with a significant level of danger which new investors should be aware of. If you want to be a successful investor, you must be alert and know how to identify and manage risks. Number 1, education is a must before investing. Know the areas before investing in real estate or any other venture. Becoming familiar with the types of risks connected with your investment is vital before you put your money in danger. The financial instrument or product in which you are investing must also be understood. For example, if you want to invest in stocks, you'll need to understand what stocks are, how to assess equities, and how the stock market functions. As a starting point, it is advised that you consult a few generic books and web tutorials. Investing should never be done without a thorough awareness of the product. Number 2, volatility. Volatility should be considered before making an investment. Market prices increase and decrease. Markets that experience frequent swings or variations are considered extremely volatile by the market's participants. If the investment, market, or economy has little volatility, then it is stable. Investors should keep in mind that national and worldwide economic trends might fluctuate. This will also have an influence on the number of returns that an investment generates, as well as the level of volatility. Risky investments are often connected with volatile markets. Number 3, market testing. A product might fail for a variety of reasons, no matter how fantastic it is expected to be. A market that is easily accessible can help you gain useful knowledge by testing your product. Accordingly, the product can be released if the test results show that there is a large demand for the product you intend to launch. Product testing is another successful kind of testing that may evaluate a product's prospective performance. It is possible to get meaningful input from a potential customer group using a variety of approaches that are available. Number 4, risk assessment should be done before investing. Investments are vulnerable to market risk in the vast majority of cases. It's always possible that your investment will be worth less in the event that the market drops in value or if there is an unforeseeable disaster. Doing a good risk assessment before investing is so essential. Think of real estate, for example. You should be aware of how much and why people are willing to pay to live in that region. In addition, you should think about the reasons that might cause the demand to decline. Number 5, not every investment will pay off. Even the world's most successful investors have lost money at some point. And at some point in your life, you will also experience failures. You will also lose your money. However, if you have diversified your portfolio, you will not lose all your money. Now, you might be thinking about what you should do. The golden rule is to never invest money that you can't afford to lose. Investments in the financial markets are inherently hazardous, and no investor has ever been able to anticipate the market correctly every time. Consequently, you should always be psychologically and financially prepared to lose a substantial portion of your investment, or perhaps all of your investment at once. To ensure your financial stability, do not invest more money than you can afford. I would suggest that you put enough money in your savings account so you can survive around 3 to 6 months if you experience a major loss. Number 6, pay off your high-interest credit card debt. If you have high-interest debt, no investment plan pays off better or with less risk than paying it off. Anyone with high-interest credit cards would be prudent to pay off their balances in full as soon as possible, regardless of the market situation. You need to pay off all of your credit cards and other high-interest debts. If you owe money at a high rate of interest, such as 8%, there is nothing better you can do with your funds than paying it off. There is no investment that comes close to beating the amount of money you'll save by paying off your credit cards over the long run. Consider the following. Extra payments on a 15% interest credit card are functionally equivalent to making an investment that yields 15% per year after taxes. For every $100 of that debt you pay down each year until the card is paid off, you won't have to pay $15 in interest charges. You won't find a single investment in the world that can come close to that level of consistency. Number 7, fraud assessment. I would say that this is the most important point of this video. Always keep in mind that there are countless scammers out there who want to steal your money. They will do anything to scam you, and once you are trapped in their scams, you will lose your money. It is especially important to be aware of scammers in this age of the internet. Let me tell you that scammers are often aware of the news stories. Investors may be defrauded by fraudulent users regularly. Their goal is to make the opportunity sound more credible and persuade investors. During economic downturns, such circumstances are not out of the question. As a result, you should ask questions and then confirm the answers with a third party before investing. Number 8. Diversify your investment account. These are two of the most important investment guidelines to remember. When it comes to protecting yourself from market risk, diversifying your portfolio is important. As an investor, you should diversify your portfolio by purchasing stocks from a variety of industries. This means that you don't lose all of your money in the event of a market meltdown or corporate bankruptcy. To further diversify your portfolio, it is even preferable to invest in a variety of financial instruments, such as mutual funds, commodities, and cryptocurrency. Also, when investing, keep the long term in mind. As a result, short-term investments in financial products are considered risky. Speculating on the market increases your risk of losing your money. Number 9. Be consistent. Be consistent and create a habit of investing even if you don't see instant benefits from your efforts. As long as you're consistent, your investments are considerably more likely to succeed. Beginners do not need to be wealthy or make large investments to get started. Spending little amounts of money on a regular basis is more beneficial than investing large sums of money. For example, your investment strategy should be clearly defined and adhered to. Everyone gets tired of utilizing the same strategy over and over again. It's natural. But a consistently followed investment plan will prove successful in time. Number 10. Cash reserve. There are times when the best prepared plans are derailed by unforeseen circumstances. However, what happens if you lose your job and your investing strategy isn't working? Why do you have to do this if you become sick? But what happens if your automobile breaks down? In these instances, many individuals resort to credit cards. But credit cards aren't always the greatest solution to a financial problem like this. Banks might occasionally deactivate your cards if you're having financial difficulties. That is the reason why I encourage anyone who invests to have a solid emergency fund in a savings account. Your emergency fund is intended only to protect your larger financial goals from being thrown off course by life's unforeseen events. Final thoughts. Although starting to invest is an excellent idea and it can help you become rich, you must keep in mind that you should first acquire knowledge about the financial instrument or product you are investing in. For example, you might be planning to invest in stocks. You must first learn about how the stock market works. And if you want to become successful, it is important to diversify your investments since it can help reduce the risk of losing money. And lastly, you should stay consistent. Is there anything else that should have been included in this list? If yes, let me know in the comments below, and I will see you in the next video. If you have not already subscribed to this channel, subscribe to it and press that bell button so you receive a notification each time we upload an interesting video on this channel. That's all for today's video. Thanks for watching, and we will see you in the next one.